Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has struggled to recapture its bullish charm since snapping out of its 4-day bullish streak on Tuesday. And since then we've got a long-legged doji and a little bit of indecisiveness in terms of where to go next. The technical implications are breaking down a little, but not quite to support the bearish case and reinstating the move down, but there's a few hurdles to clear. A move through 68.25 would open and expose the region back towards 67.70. However, any advances should find resistance around 68.85 or close to 68.95, which was the mid-September highs. Overall, as I mentioned, I am bearish. Looking at the US dollar index, which measures the greenback strength against a basket of 6 major currencies, posted a second doji overnight, which in turn continues to question the bearish case. The doji is one of the most revealing signals in candlestick trading, the doji appearing at the end of an extended trend, this being the dollar index, the high from 99.20 down to a low of 96.85, has significant implications in terms of that bears and bulls are now at an equilibrium or a state of indecisiveness, and therefore possibly the trend may be near its end. If that's the case, then we have seen a top which comes in roughly around 111.80 to 112.15. If we do see further weakness, then I'm looking for a move through 111.10 and down towards 110.65, which is the trigger level to support the bearish case. Any advances should continue to fail towards the top side. Also to note, we have the ECB rate decision tonight, so the market will be keeping a very close watch on that too. The dollar yen, well, the market is somewhat still a little bit uncertain in terms of the break to the downside after it flirted around the level of 108.40 a couple of times. Nevertheless, the technicals are breaking down. We need to keep a close watch on this. The close under 108.40 would suggest further weakness and give a target of 107.1535. On the top side, the resistance is seen at 108.80 and a trigger level at 109.05. And as long as we don't break that, then the bears will remain in control. Well, since the rejection twice of 130, it does question now where the pound might be heading after the recent rejection to the default plan in Parliament has now left the pound in and also Brexit in limbo. Nevertheless, I'm neutral because the technical implications are still somewhat uncertain. So therefore, I'd rather sit out for now until we get some direction from these daily technicals. Gold, as you can see, is continuing to trade sideways and now at present is waiting for the next week's announcement to the US Federal Reserve Open Market Committee, also known as the FOMC. They are scheduled to sit in a 2-day meeting on the 28th and 29th of October, and with a possible rate cut in view and one next year would wrap it up for the Fed in terms of lowering rates, but that currently sit around 1.75 to 2%. No doubt the market will be looking further into where the gold can go, and if so, we could be looking up towards 1,512.14. That is the trigger level. If it breaks there, then I'm looking up to 1,550, the recent highs. But do note that the bears are still looking in terms of the downside and could still see a challenge towards the region of 1,476 to 1,460. Wrapping up with oil, market surged overnight and now getting closer to its objective of $56 to $57. I feel in the pattern that's holding should eventually reach there, and I will be taking profit if it does strike that target. Any pullbacks should be limited, with the support now seen at $54.80 to $53.65. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to this new day.